Hey, good afternoon. This is John with mylendingplace.com. Today is December 11th, Wednesday. Phone number 512-996-8194. Now, we are a Texas mortgage company. We do refis all over the state. We basically help people buy, refinance, or do cash out loans. I wanted to talk briefly about rates. I'm using the snow filter just so that, because it's still cold, it's December, I thought hopefully kind of make this a little bit more enjoyable to watch. But if you have any specific questions regarding a mortgage, 512-996-8194, or email me at john@mylendingplace.com, or just apply. I went to Bank of America earlier today, like about an hour ago, and I noticed that they were offering, and you can see at the very bottom here, they were offering 12/11 a 4.375 interest rate. But in order to get the 4.3, you have to buy the rate down, or at least with them, to get the 4.3, you have to buy the rate down 1.4 points. Well, what is my point? Sorry for the pun, but when you're shopping for a loan, there's really three questions you should ask. Okay. And most people know this, but I'm amazed how people, even, I work with, all kinds of people all over the state. Most people, when they call me, they just want to know what the interest rate is. They don't really care about the fees, and therefore that's why a lot of banks will advertise loans like this, 4.375 with the 1.4 buy down. Well, what is a buy down? A buy down is when you're literally buying the rate down. Okay? Why is that important? Because that's a closing cost. Every loan has closing costs, but they're effectively charging you more money up front, 1.4 points or percentage points, to get the 4.3. Now, is it bad to buy a rate down? We don't know. That's a whole different discussion. But the point that I'm making is, if you want to advertise low rates, all you have to do is do what they're doing here, and that is to simply say, hey, the real rate is X, but let's offer you a much lower rate, hoping that you're not looking at the 1.4 buy down fees. Well, if you were buying a $300,000 house, 1.4, it's about $4,200 in lender fees just to get the 4.3, okay? So it's okay to buy the rate down as long as you, A, know you're doing it, and B, you've run the math to make sure that it actually makes sense for you. And then if you want someone to help you run the math, or kind of to look at both scenarios, go ahead, again, call me, 512-996-8194. That's my Austin number, but of course we do loans in Austin and Dallas. But this is kind of, I thought was interesting. This is Bank of America's website. And I'm going to just refresh the browser. Notice that on their retail, they're offering 4.5. But on the retail they're offering 4.3, but their website they're offering 4.5. Well, we both know that Bank of America, they're not offering it like a different loan. It's just they're packaging the loan this way here, and then in their retail they're packaging it a little bit lower. So the point that I'm making is, when you're shopping for a loan, whether you're using Bank of America, you're going to use Wells Fargo, My Lending Place, ask three questions. What is the rate? What are the total fees? And then ask what's the payment? Because, for example, with FHA is for people putting 3.5% down. And you with FHA, you'll have a lower interest rate, but you'll often have a higher payment because FHA has mortgage insurance. Whereas with me, a lot of my conventional loans, or most of them, do not have mortgage insurance because my customers usually have a 670 and above, and I can offer loans without mortgage insurance. So all that to say is, when you're shopping for a loan, A, we hope you'll call us, but B, look at the interest rate. Look at the closing cost, the total closing cost without buy downs, and then look at the payment. Again, if you have any questions, 512-996-8194, mylendingplace.com. If you need me, I'll be looking for a different filter so that come March, I'm not using the snow one. Okay? mylendingplace.com. Bye.